Hello, everybody. My name is Irina Ryshkova, and I am nonprofit auditor. I have my practice in downtown Oakland, and we serve nonprofit community. This is video number 1, and these videos I've decided to share with nonprofit community, specifically finance and management, my experience as an auditor about the issues and topics that finance in nonprofits struggled with, and provide some feedback and hopefully some education how to properly record transactions in accordance with GAAP, General Accepted Accounting Principles. Today is the video number 1, where we will be talking about the revenue recognition. Before we're gonna start talking about revenue recognition, I wanna make a disclaimer that this video, it's not intended to be authoritative literature. This is just my thoughts and my experience. If your nonprofit has any specific contracts, agreements that requires deep analysis, how to record revenue, you need to consult with your own auditor and bookkeepers about that specific contract. So let's start. Why revenue recognition? Revenue is a very important and big topic in nonprofits. It's a very complicated topic because nonprofits revenue recognized based on 2 different standards. Standard 958, which is contributions, and Standard 606, which is earned revenue. For a nonprofit organization to decide how to record each separate grant contract, first of all, nonprofit needs to identify which standard to follow. Therefore, the first and foremost, nonprofits should have a contract or grant letter or donation letter. The name is really not that important, and read it to identify whether it's contribution or earned revenue. Contribution, sometimes we use different words for contribution. We can say donation, grants, and it can even be told that it's a contract. For exchange transaction, for revenue recognition, it's exchange transaction. So let's take a look at these 2 different standards. Once again, contribution, donation, or grant, it's considered non-exchange transaction. Revenue, it's considered exchange transaction. What is the difference? We have to always look who is final beneficiary of the services that nonprofit provides. If beneficiary of the services or recipient of the services is the same party that pays for these services, it's a contract, because that we're having an exchange. Party that pays to nonprofit receives the benefit for the services. So it's exchange of considerations. It's considered exchange transaction. This is called exchange transaction under 606, and revenue is recognized as soon as services are provided. As soon as revenue is earned when the service is provided. Under contribution, the party that pays for the services, it's not the final recipient of the benefits that the nonprofits provides. So when donor gives money to a nonprofit provides services to public in general. That non-reciprocal transaction and revenue is recognized as a contribution, not when it's earned, not when the service is provided, but as soon as that promise is made unconditionally. The full amount of revenue is recognized. Now, let's take a look at the example so we understand how the revenue should be recorded under both of these standards. Let's take a look how the revenue recognition works in real life when there's exchange transaction versus contribution. Let's take a look at the example when the city of San Jose owns a park. And city of San Jose needs to maintain and beautify the park. City of San Jose found a nonprofit that provides beautification services, and they hiring this nonprofit gives them a contract to beautify and maintain the park for the period of 5 years, $100,000 a year. This contract might have some payments, schedules, how the money will be paid, but in the terms of GAAP, General Accepted Accounting Principles, payment schedule is irrelevant for the revenue recognition. Therefore, let's take a look how nonprofit should record revenue under this contract. City of San Jose pays to the nonprofit to provide services for the park that owns by the City of San Jose. So it's example of exchange transaction. City of San Jose paying money and receives the benefit of the services. Because it's an exchange transaction, revenue is recognized when it's earned by a nonprofit. Assuming every year, year one, nonprofit will provide the services and earn $100,000. So in the year one, $100,000 will be recorded as a revenue. Then in the year two, $100,000 will be recorded as a revenue. Year three, $100,000 as revenue. 4, and then year 5. So every year, as soon as nonprofit provides the services, when they earned, nonprofit will recognize the revenue. This is an example of exchange transaction. Now, let's take a look at a different example, non-exchange transaction, when City of San Jose wants the streets of the city be beautiful and want to plant X amount of trees in the City of San Jose. City of San Jose found nonprofit that provides various beautification projects in City of San Jose and hires that nonprofit. They can call it hires or give a grant to nonprofit to provide beautification services in the City of San Jose. Who is beneficiary of these services? It's a general public, not the City of San Jose. Therefore, it's a grant. And let's just say this grant contribution says that it's for 5 years, $100,000 a year. Because it's a contribution, the full amount should be recognized in a year one as a revenue. Therefore, in a year one, nonprofit should record $500,000, which is $100,000 multiplied by 5, $500,000 as a revenue in a year one. It will be restricted because it's specifically for the services provided in the City of San Jose, assuming it's narrower than the mission of the nonprofit. But the full revenue would be recognized in year one. No revenue will be recognized in subsequent years. Number 2, 3, 4, 5, no revenue. In the future years, all what will happen is just release of restricted net assets, which is balance sheet transaction. There are going to be nothing in the profit and loss in the statement of activity, no revenue. So once again, to summarize, exchange transaction, when the beneficiary of the services, the same party that pays for services, revenue recognized when the services are provided, contributions when the recipient of the services is different party from whoever pays for the services, and revenue is recognized as soon as it's unconditionally promised. And we will continue revenue recognition for contributions, and we will be talking about restricted contributions and non-restricted contributions, conditional contributions and non-conditional contributions in a video number 2. Thank you. Have a wonderful day, and please come and watch video number 2. Thank you.